Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 26th of November, Thursday. As usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold traded slightly lower by 0.02%. The pair of Euro-US dollar climbed higher by 0.18%, dollar index further losses by 0.10%, while oil extending gains by 2.37%. So let's get into details with our headlines of today. First, let's continue our discussion on the oil market, where we can see that crude oil had successfully extended its gains for the 4th consecutive days. Now, the latest round of support comes from the upbeat inventories report from the United States, and according to the Energy Information Administration, or the EIA, US inventories levels fell by 700,000 barrels last week, beating economists' expectations of 100,000 barrels build-up. Now, the oil bulls are making use of every opportunity they have in the market to try to push prices back to its pre-pandemic levels, now especially during the time of a weaker dollar and a higher market risk sentiment. Furthermore, we also have investors waiting on the official release of an effective vaccine and also the resumption of the airline sectors, where both of these factors could drive oil prices all the way back to above $50 per barrel. So instruments involved here would be crude oil itself and also the Canadian dollar, where Canada's economy depends highly on the prices of crude oil. Next, let's take a look at the dollar, where we can see dollar continues to extend losses while testing close to the 92 support. Now, the 92 level had acted as a strong support since the month of August. However, the dollar index closed Wednesday's market slightly below the level as investors continue to dive into riskier assets. Now, while the market waits for the official release on an effective vaccine, they will first turn their focus to the central bank's final policy meeting for the year 2020. And most central banks are widely expected to maintain loose monetary policies. Some might even expect further action, or such as lower interest rate or more bond buying. So investors would potentially turn their focus towards the outcome of most of the central banks meeting, where further loosening might boost the market risk appetite and pressuring the dollar further. So instruments involved here would be dollar index itself. And moving on, let's take a look at the news release. So for today, we don't have any important economic data to focus on, as US is currently having its Thanksgiving Day for Thursday and also for tomorrow's market. So we can expect slightly slower movement in the overall market. So moving on would be the technicals. So here's an overview of instruments to be covered today. First off, GBP US dollar, H4 showing an uptrend, Euro Japanese yen, H4 also in an uptrend, Australian dollar against Canadian dollar also in an uptrend, and for the New Zealand dollar against Japanese yen, and the H4 also in an uptrend. So let's get into details with the chart analysis, starting with the pound. So previously, we have a highest point of Fibonacci from here towards the lowest point, and we can see that overall trading for the pair remains in a strong and healthy bullish momentum. And also, we can construct an overall uptrend connecting the higher lows over here. And overall, MACD supporting bullish momentum suggests the pair to continue extend higher towards the 100.0 Fibonacci near 1.3480. So overall, investors are advised to wait for some technical pullback towards the upward trend line to enter into long positions. Take profit should be set at the 100.0 Fibonacci near 1.3480, and stop loss for each entry point should be below the upward trend line. So a best position right now would be at least a 60 pips stop loss from the current point at 1.3330. Or to be even safer, 80 pips movement would be 1.3310. So overall, cautious investors can still consider long positions when there's some technical pullback back towards the upward trend line, and stop loss should be placed at the 1.3310 and take profit set at 100.0 Fibonacci near 1.3480. Next, for the Euro Japanese yen in the H4 chart, now constructing the Fibonacci from the highest point to the lowest point, we can see that the pair has successfully broken above the 61.8 previously, and also the resistance covered here near 124.3. So overall, trading for the pair remains in overall uptrend, so investors can still consider long positions at lower levels with a target profit near the 100.0 Fibonacci at 125.0, and a stop loss should be placed all the way towards the 61.8 Fibonacci, just right below the 20 moving average. So if the pair does breaks below back towards the support of 124.3, aggressive investors can consider short positions. Stop loss should be placed 30 pips from the entry point at 124.6, and the take profit targeted all the way towards the 61.8 Fibonacci. However, for cautious investors, again, you are advised to follow the trend, wait for any technical correction to enter into long positions where your stop loss should be below 61.8 Fibonacci, and take profit all the way to its 100.0 Fibonacci. Next, for Australian dollar against the Canadian dollar. Now looking back, we can construct the Fibonacci from the highest point here towards the lowest point. And overall, we can see that the pair is currently testing towards a resistance near 0.9580. So overall, MACD still in a bullish momentum. Bullish bias suggests the pair to extend higher after a successful breakout above the resistance level. Now, after the breakout, cautious investors are advised to consider long positions. Stop loss should be placed 40 pips at 0.9540, and a take profit can be set all the way to its 100.0 Fibonacci near 0.9660. However, if the pair fails to break above, it might signal further technical pullback towards the 60 moving average, or even further at the 61.8 Fibonacci, and aggressive investors then are advised to consider short positions. Stop loss should be placed 30 pips from the resistance, and a take profit first targeted all the way towards the 60 moving average at 0.9540, and the second targeted profit at the 61.8 Fibonacci near 0.9510. Lastly, for the pair of New Zealand dollar against the Japanese yen, now to find the resistance, we would need to look into the daily chart. And overall, there is the closest resistance would be 73.4. So overall, in the daily chart, it is still in a very strong uptrend for the pair. However, as we take a look into the H4, it is signaling a possible negative divergence with momentum climbing lower overall, while prices extending higher. So we can expect possibly a strong technical pullback from the high levels before continuing its upward potential. So aggressive investors can consider short positions at the current level 73.1. Stop loss should be placed above the resistance at 73.5 to be safe, and take profit first targeted all the way towards the support here at 72.7, and a further target would be the next support close to 72.2. However, for cautious investors, again, you are advised to follow the trend, wait for a bullish breakout above the 73 resistance before entering into long positions, or wait for a technical pullback all the way towards the 60 moving average, which is also the support near 72.2, to enter into a long positions for the pair. So that's all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.